to keep checking on oil here because despite the fact that OPEC has again cut its demand forecast for 2021, WTI futures trading down 0.2%, right around that 37 handle in terms of per barrel. Guy, it's so interesting to me. We keep having this conversation about whether or not oil demand recovery, the speed at which it's going to actually happen. Now it seems to be reversing the supply and demand dynamics. Just not accelerating or improving in terms of in favor of the oil market as they once were. You heard that reiterated from Trafigura earlier today, them saying, the shop over there saying that it's likely going to be back into a surplus in the very near term. And we want to get more information on this now with futures in focus. Again, we're looking at oil here. Brent down now about 0.3%. And to chat about this further, we have Mike McGlone joining us, Bloomberg Intelligence commodity strategist. So, Mike, what's going on?
I think you nailed it, Kaylee. The key thing is it's the power of estimate revisions. And for a good 5 years now, maybe 10 years, all the estimates for demand have been lower. That's happened again. BP came out lately. OPEC is fighting a losing battle. So they're about 25% of the market now. Maybe 10 years ago, they were 40% of the market. Where's that trend going? That's the bottom line. And then we have the stock market. At least it's up today. But if the stock market can't go higher, if it goes down, crude oil will go down with double the velocity. That's been the pattern for a number of years.
Mike, what should I make of the fact that some of the large funds are starting to buy capacity on VLCCs? What should I read into that, and what does that tell me about the trajectory of oil for the next 6 months?
Well, you nailed it, Guy. There's a lot of storage. There's way too much supply in the market, and they need to put that storage someplace. So that kind of is reflected in the steep contango. So they're doing that, selling forward in the curve, locking in some of that money. But this is deja vu all over again. And the problem is, for me, a guy who loves to be bullish, crude oil is not the commodity to be bullish. Maybe gold, but not crude oil.
Okay, well, deja vu all over again. Are we going to see deja vu all over again in terms of one of the most remarkable market instances in 2020 when crude prices actually went negative? Is that a risk of happening again, or not that dramatic?
Well, you say never, but I would say this is a never, because the market's figured it out. Initially people started to price for it, then it doesn't happen again. It's, you have to have that initial shock. So I think that's done. It's not going to happen. And that's the thing you mentioned Brent earlier. Brent didn't do that, but WTI is U.S. It reflected that massive supply and the plunge in demand. I don't think it's happening again, but I see WTI 40 is basically the new 60. 60 was resistance last year, and now it's 40. So I expect it to hover there, and the risks are it goes lower.
In terms of what we're seeing in other commodities, how much of this is reflected in some of the other price action?
Well, that's a unique thing right now. The highest correlation in commodities is typically between the macroeconomic sensitive two, and that's crude oil and copper. And right now, copper's doing very well. It's hanging around $3 a pound, which is quite unique. But typically, they trade together. So I view copper as at very high risk of falling crude oil lower. And the number one catalyst would be if the stock market declines. So hopefully, copper can hang in there. But right now, I'm a little bit worried about copper.